How do you make sense of a stock that is up, like a staggering 630% year over year?
I mean, it's an incredible number.
It is, and they secured these massive contracts with Meta and Microsoft.
Yeah.
But at the same time, it's currently experiencing a falling trend.
Right, the charts are flashing momentum sell signals.
Exactly. And you're seeing its own executives cash out. So, we have to ask, is this an incredibly undervalued AI powerhouse?
Yeah.
Or is it just a classic value trap waiting to catch retail traders?
That is the ultimate question for anyone watching the ticker right now.
Yeah. So our mission today is to analyze these wildly conflicting signals surrounding Nebius Group ticker NBIS. We're looking at everything from their explosive financials to the technical charts and those insider sell-offs.
We really need to unpack what is driving this extreme volatility.
We do. But before we get into the weeds, just a quick reminder to like this video and subscribe to the YouTube channel. And we explicitly want you to leave your comments and feedback below because your input is what drives these future deep dives.
And just to set the ground rules here, this deep dive is an educational exploration.
Yeah.
We're looking at the provided data and having a natural human debate.
Right.
This absolutely does not constitute financial advice.
Okay, let's jump in. I like to think of this stop like a rocket ship, right? It just left the atmosphere with that 630% surge.
Yeah, quite the launch.
But suddenly, it is experiencing intense turbulence.
Yeah.
I mean, we saw a recent 4.59% drop down to $157.14.
Right, hitting some serious resistance.
Okay, let's unpack this. Before we look at where the ship is going, what kind of fuel actually got it this high in the first place?
Well, the fundamental engine here was a massive strategic pivot. They completely separated from their Russian assets, specifically Yandex.
Oh, wow. Okay, that's a huge geopolitical de-risking.
Exactly. And once they had that clean slate, they went all in on AI cloud infrastructure.
And looking at the unaudited FY 2025 income statement, I mean, it seems like that pivot is paying off.
Oh, absolutely.
Their annual revenue hit $529.8 million. That is up 479% year over year.
Yeah, and the momentum is very front-loaded. I mean, Q4 alone brought in $227.7 million.
Right. And net income hit $29 million, which is a massive recovery from a $352 million loss back in 2024.
That turnaround is what Wall Street loves to see. Plus, Q4 saw their first positive adjusted EBITDA at $15 million.
Okay, so that proves they can actually turn a profit.
It does. It validates the pivot. But here is where it gets crazy. You look at the balance sheet and cash flow.
Right.
They hold $3.68 billion in cash and short-term investments against $4.89 billion in total debt. Total shareholders' equity is at $4.61 billion.
Okay, that sounds relatively standard for a growing tech company, right?
Yeah, sure. But crucially, they have announced a staggering capital expenditure plan, a CapEx plan of up to $20 billion.
Wait, what? $20 billion.
Yeah, $20 billion to expand their GPU capacity. It's a massive levered bet on future AI dominance.
Here's where it gets really interesting to me because, well, let me stop you. They only made $529 million in revenue last year.
Right.
But they are planning up to $20 billion in CapEx for GPUs. I mean, it's like a local bakery taking out a massive loan to build a global supply chain before they've sold a single extra loaf of bread.
That's a great analogy.
How does a company justify spending nearly 40 times its annual revenue on infrastructure?
They justify it because in AI infrastructure, if you don't build the data centers right now, you get locked out of the market. You have to spend the money up front.
Wow. Okay, so that massive $20 billion bet is what the market is trying to digest right now.
Exactly. And that leads us directly into the technical turbulence we're seeing on the charts.
Right. Let's look at the price action because the trend direction is sort of neutral to bullish.
Yeah, it's up 15.26% over the last 7 days. But it is currently in a minor consolidation phase.
Which makes sense.
Yeah.
Looking at the key levels, we have support at $144.97, which was a recent breakout.
And deeper support at 136.33.
Right. But then we have resistance at that recent peak of 165.34, and of course the all-time high of 168.71.
Which they just hit on April 15th, yeah. What's fascinating here is the momentum indicators. The 14-day RSI is sitting right around 38.
Wait, 38? After a 630% run.
Yep. It's neutral to lower. They successfully avoided overbought territory.
That's actually pretty healthy. And the moving averages are bullish, right? The price is sitting above the 20-day EMA of 130.87.
And it's well above the 50-day EMA, which is down at 115.40.
Okay, so the trend is strong. But here's the catch. The Man-CD is at 14.78.
Ah, yes.
And from what I'm seeing, that is currently triggering a sell signal on some tools due to momentum deceleration.
Exactly. And what's fascinating here is that divergence. You have a low RSI combined with a Man-CD sell signal.
So what does this all mean for the momentum? I mean, if the 50-day average says bullish, but the Man-CD says sell, aren't the charts just contradicting themselves?
Not exactly. It suggests the aggressive buying momentum is just exhausted.
Got
So
it.
that leads to short-term weakness, even if those underlying moving averages remain really strong. The acceleration has stopped.
The acceleration has stopped. So let's look at how actual humans are reacting to that deceleration.
The human element is always the wildest part.
Truly. Let's talk about the ratings, the insiders, and this whole value trap debate.
Right.
Because the consensus analyst rating is a moderate buy. We've got 10 buy ratings, 1 strong buy, 3 holds, and just 1 sell.
Very positive on the street.
But the consensus price target is $154.75.
Which means the stock is currently trading above expert expectations.
Exactly. It's at 157.14 right now. And if we look at the order flow, there was aggressive institutional accumulation in early April.
The big funds were buying.
Right. But right at the peak, insiders started selling.
Oh, yeah.
CEO Arkady Velaz sold $3.46 million in stock. Chief Revenue Officer Mark Boroditsky sold $720K.
And Director Elena Bunina sold roughly $3 million all across mid-April trades.
Meanwhile, retail sentiment shows mixed options activity as the price cools. I mean, it's like a chef quietly sneaking out the back door of their own restaurant right before the dinner rush.
That's exactly how retail traders feel right now.
I mean, if the institutional buyers were accumulating in early April, but the CEO and director are dumping millions of dollars in stock right at the top, why should a retail trader feel confident jumping in now? Aren't retail traders just walking into a trap?
And that question is the entire core of the undervalued versus value trap debate.
Okay, break that down for us.
Well, let's look at the valuation. The stock has an eye-watering PE ratio of 1,428.
A PE of 1,428. That is just astronomical.
It is. So the bears argue that this creates immense downside risk. They see it as a total value trap where retail traders end up providing exit liquidity for those cashing out executives.
Right, like please buy my shares at the top.
Exactly. But the bulls, they argue the stock is actually 33% undervalued right now.
Right, undervalued. With a PE over 1,000.
Yes, based on its future AI utility and its incredibly deep engineering partnership with NVIDIA. They believe the market hasn't fully priced in the future earnings potential.
Which brings us to the ultimate bull versus bear scenarios. Because the bulls have some serious trump cards here.
Massive ones.
They've got these massive contracts. A $17 billion contract with Microsoft and a $27 billion contract with Meta.
That's $44 billion in locked-up pipeline.
Right. And if they execute and hit their $7 to $9 billion ARR goal by late 2026, I mean, the medium to long-term targets range from $182 up to a staggering $394.
That's the best-case recovery scenario, but we have to look the worst-case continuation lower, too.
Right, the bear case.
The company has a history of operational bottlenecks and reduced revenue guidance.
Well, that's dangerous.
Very. With a PE ratio over 1,000, any miss on growth could trigger a massive crash. The valuation demands perfection.
Wait, but they have $44 billion in contracts locked up with 2 of the biggest tech companies on Earth. Does a history of operational bottlenecks even matter when you have Microsoft and Meta backing your play?
If we connect this to the bigger picture, it absolutely matters. Contracts can be canceled if you don't deliver the servers on time.
Right. So the short-term outlook is projected to trade in a very tight nervous range between $151 and $158.
Because the market is waiting. The ultimate tiebreaker for these scenarios is just days away.
The earnings report.
Yes. The Q1 2026 earnings report is scheduled for April 29th, 2026. This is the catalyst that will definitively validate either the bulls or the bears.
Wow. Okay, so to summarize this crazy story, we're looking at a company sitting on the very edge of massive AI infrastructure dominance fueled by big tech contracts.
Yep.
But at the exact same time, it is currently shadowed by short-term technical weakness, sky-high valuations, and executives taking profits.
It's a true paradox, and I want to leave you with a final thought to ponder before that earnings call.
Let's hear it.
Given that massive $20 billion CapEx plan required to fulfill the Meta and Microsoft contracts, what happens if Nebius hits an operational bottleneck they simply can't afford to fix?
Oh, man.
Will those mega-cap partners step in and quietly acquire them for parts, or will they purr their contracts entirely and leave the stock to plummet?
That is a terrifying question for anyone holding shares right now.
It really is.
Well, we want to know what you think.
Yeah.
Make sure to subscribe to the YouTube channel, like this video, and drop a comment below with your own take.
Yeah, let us know.
Is Nebius a strong buy or a carefully laid value trap?
The April 29th earnings call is going to be incredibly exciting.
It really is. We are ending on a note of exciting uncertainty, and we'll be right back here to break it all down for you after the 29th.
Thanks for listening.